Hey everybody, hope everyone's doing well and had a good day. This video will be a review of the Emini 5-minute chart for Thursday, June 26th, 2025. We have a gap up going into the day. Let's talk about the daily chart first. And here's the information we have going into the day. The market is in a bull trend. Now, we just had what might be a wedge bull flag. There's different ways to count it, maybe 1, 2, 3, or maybe it's 1, 2, pause, 3. Either way, minor reversal attempts, fairly tight channel. Now we have a strong bull trend bar and a follow-through bar, and then a doji. Now I have this channel line drawn. We might be testing the channel line, which is expected to be resistance. What does that mean? You can sell. The problem with selling here is there's a couple problems. First thing is the trader's equation. Plenty of traders will look to sell a bar like this, especially in this context, 3 or 4 pushes up to the channel line. The bull's getting a breakout, smaller bar, and then even smaller bar, so losing momentum. Traders will sell for mean reversion, but if you're selling below a bar like yesterday, very small risk and very low probability. So your reward is great. Your big reward relative to the risk makes up for the low probability. But you have to understand that you're taking a low probability trade if you're selling here. More likely, the bull breakout will get a second leg, and this will be a minor reversal, and we'll get a second leg. And the minimum target for the bulls is a new high. Of course, what they really like is a measured move up based on the breakout or reversal and follow through. And that takes us near the all-time high. In general, probably not wise to sell momentum like this in a bull trend. It's one thing to sell bull momentum in a trading range, like back here. The market is sideways, 3-bar micro channel, but testing breakout points here. After a big bear breakout that should get a second leg down, overlap. So this is already 2 legs up. Selling here is a lot different than selling where we currently are on the daily chart. And the traders, if traders were looking to sell below yesterday's low, they did not get the chance, which I'll get into here. So we gapped up going into the day. Let's talk about the Globex chart. Here's the 15-minute from the overnight session. Here's what we had going into the day on the 5-minute chart. It's always good to take a look at the Globex chart, especially when there's a big gap. So over here is yesterday's close. What happened from yesterday's close to today's open? Tight bull channel evolving into a trading range. Small pullback trend. Here you can call it a spike in channel. The channel evolved into a trading range. So 1, 2, 3, maybe 4 pushes up. Start of the channel back here. Spike, pullback. Channel evolved into a trading range. Is this enough for a major reversal? And are we going to come back and test maybe all the way down here? Well, this is a tight channel with lots of open gaps. Where is the selling pressure? The first thing we want to see is a significant trend line break. So maybe this is the bull trend line. Maybe it's a little higher. Maybe it's something like that. And the bears did get a significant break far below the trend line, but the bar closed still above the moving average. So Trading range, yes, broke out to a new high, and we ended up falling below this major higher low. And that tells you the market is either in a trading range or a bear trend at this point. But look at the overlap. Where are the big consecutive bear trend bars breaking strongly below the trend line and the EMA? And that doesn't exist. So for a major reversal, I think that's low probability. If that's the case, we could continue to go sideways here. And because the bull trend preceded the trading range, breakout direction at least slightly favors the bulls. Trading ranges are minor reversals, and you can think about them as flags. So in a bull trend, if there's a trading range, breakout direction favors the bulls, so an upside breakout. And you can see even here, this trendline break still got a second leg. Let's go to the 5-minute RTH. For the 5-minute, we gapped up. We understand what the Globex looks like. So we're gapping above yesterday's high. Yesterday's high usually acts as support and resistance. If we opened within yesterday's range, below yesterday's high, then yesterday's high would be expected to be resistance. Last time we were at this price, market sold off, we tested it again, sold off for many points. But now we're breaking above it. And because of that, what used to be resistance becomes support. So now that we're above yesterday's high with a gap up and a follow-through bar, yesterday's high is expected to be support. Bar 1, follow-through bar after the gap, good for the bulls, probably buyers below. Bar 2, outside bar, trading range bar. Lots of overlap between the first two bars, suggests trading range open, sellers above, buyers below. Inside bar on 3, breakout mode, IOI, tight trading range, sellers above, buyers below. Yesterday's high might be a magnet. We may have to test lower, but ultimately, because of the higher time frame context and the Globex session, really would like to see strong bear bars before I'm looking to sell. Bar 4, another outside bar for the bears, but closing within the range of the tight trading range, broke out below the bars to the left, but tested yesterday's high and then bounced, so we found support. Will the bears get follow-through selling? And then bar 5, bad follow-through for the bears. The follow-through bar is a bull reversal bar. It's a weak bar, not the strongest bull reversal bar, but it's closing above its midpoint, it's closing above the open, and it's a bad, the bears did not get follow-through on bar 4. So bear breakout bar, but lots of overlap and no follow-through. Because it's a tight trading range, you wonder, will we test the top of the range? We tried to break below, seems to be failing. Now maybe we vacuum to the high. Also on a smaller time frame, the bears had a breakout, a pullback, and a second leg. This is a micro double bottom, and on that smaller time frame, it might even be a wedge, bar 1 or 2, and then 4 and 5. So several attempts down to support, and then a reversal bar. Aggressive to buy bar 5 because it's forcing you to trade in the middle of a tight trading range, and the bar is a trading range bar, so not ideal. Bar 6, bull trend bar, good for the bulls, reversal and follow through is strong enough for a second leg up, and probably going at least a little bit higher. And then bar 7, another follow through bar, closing above its midpoint, good for the bulls, closing above all the bars to the left. This probably resets the leg count. Tight trading range, breakout mode, failed breakout down, then bull breakout up. 3 strong bars, micro gap, uniform in size. Bars closing above the high of the prior bar in all these bars. This micro channel is probably going to get a second leg up. Bar 7 is a bad sell signal bar. For stop orders, do you really want to sell below bar 7? The bar closed above its midpoint. and it's in a strong bull breakout. There are probably more buyers below bar 7 than sellers. And the first reversal down should be minor, so second leg up expected. Bar 7, bar 8, testing below bar 7, finding buyers. If we judge the strength of bar 8 to bar 7, or 5 through 7, obviously the micro channel is stronger than the one bear bar. The bulls are expected to get a second leg up to at least test the high close of 7, if not the current high of the day up here. If this is the minimum target for the bulls, the high close of 7, this is the next minimum target. But really the bulls would like a measured move up of the reversal and follow through. Nine, an inside bar for the bears. There's a pivot point with a bull bar and then a bear breakout bar, but could not close below the low of the prior bar. Lots of overlap. It's a weak breakout bar. The context really isn't great after 3 consecutive bull bars. Minor reversal expected, meaning buyers below and second leg up. 9 might be the start of the second leg up, but inside bar. Breakouts of inside bars usually get retested within just a few bars. So if we break out above, we'll probably come back and test the high of 9. And if we break out below, we'll probably test the low of 9. Probably buyers below 9, maybe buyers above 9. It's a high 1. But it can be seen as a triangle, lower highs, higher lows, and breakouts of triangles. That's kind of the first principle why inside bars get retested, because they are triangles. Breakout direction is generally 50-50, and even if it breaks out, when it breaks out, the apex of the triangle usually gets tested. Lots of overlap on bar 10, but where is the bear breakout to sell? For me, I'm a breakout trader. I like to trade breakouts and second legs. So I see a breakout 5, 6, 7. I'm looking to capture the second leg up. And when I compare the strength of the breakout to the reversal, bar 8, I think bar 8 is a minor reversal. I'm looking to buy the breakout pullback rather than looking to sell to capture a minor second leg down. So the point with that is there's not really a major trend reversal set up here or a topping pattern. And whenever it's not really clear, if we think about where we are, we're above the steep moving average. We have this bull breakout that should get a second leg up. Whenever it's hard to find a reason to sell, usually there's a reason to buy. Everything has an opposite. So if there's a bad sell, there's a good buy. So nothing to sell. Bar 10, it might be a buy the close bar, and the reaction looks like it was. Another 3 or 4 bar micro channel, bulls getting their second leg. Nothing to sell again. Is bar 11 a good low 2? Low 1 below 7, low 2 below 11? It's really not. It's a tight bull channel. The signal bar is bad for selling. There's probably buyers below bar 11. Okay to buy the close, buy more, lower. And continuing higher. The bull breakout is growing. There's one measured move target from the reversal and follow through bars. Maybe also the breakout and follow through, the closer target. And then a buy climax, 13. Looks like the biggest bar on the chart, and it's coming after 2 legs up. Probably exhaustion. It doesn't mean there's going to be a major reversal. It just means a pullback is likely. This is a gift bar. If you're long anywhere and you get bar 13, you're probably going to look to take profits. So because 13 is a profit maximizing bar for the bulls, the market may pull back here, but the expectation is a minor reversal. There's really nothing to sell. So okay to sell to take profits, but to me, not really okay to sell to go short. Pause bar 14, expected, probably go sideways for 1 to 3 bars and then get trend resumption. And probably, if we get to the bar 12 high, support down there. 15, bear breakout bar, but testing the bar 12 high, where bar 13 broke out of, probably support here. 3-bar micro channel. The bears should get a second leg, but because the environment is bullish, bear setups are going to work less frequently, and the bull things are going to work better. So probably better to look to buy in this context. You could argue maybe it's climactic and we're far above the moving average. So maybe you have a default exit, just get out below a bear bar, exit below 14, exit below 15, that's fine. But if there's a bull bar closing near its high, you probably have to buy again. It's still always in long. 16 outside up, so reversal bar trapping bears who were selling. There were probably sellers above 15, and if a bear sold the close of 15, sold above 15, they're probably at least going to be able to avoid a loss. Selling the close of 15 was not an ideal trade, but more reasonable to sell above 15, expecting the high one to fail and pull back deeper, maybe for there to be a high 2. But 16, if you sold, it's a surprise against you. It's a stronger bar than you wanted to see. And again, if there's a sell to close bear, 15, sell above 15, their average price is the purple line, and there's probably going to be support there. So bulls, they see 16, they can probably buy in the buy zone of 16, the midpoint of 16, near this purple line. And 17 did not even get down there. Now we have a spike, a pullback. We're probably in the channel phase, and there's probably sellers at a new high. And depending on the strength of the channel should convert into a trading range. And if it does, we could test all the way back down to the start of the channel, which is the low of bar 16. 18, small inside bar, bad for selling. It's a small bar, small risk. It's a low 2, low 1 below 14, low 2, 18, but really no significant trend line break. It's a tight channel. And again, low probability, small risk, big reward. The opposite trade is buying below 18 or buying the close of 18, looking for at least a test of the high. And then buy the close 18, gets good follow through, but now 19 might be an exit bar. We have a bull breakout, pullback. We're channeling 2 legs up, nested. So leg 1, leg 2 here, and leg 1, pause, leg 2. So there might be profit taking 19. Still minor reversal, more likely. And this is a simple leg. It's a micro channel from 16 to 19. This probably needs a second leg up of its own. So another pause bar, inside bar, 20, probably not great for selling. It's better than 18. There might be sellers below 20, but the channel is still tight, and there's still no significant trendline break, so really not great for selling. Better to be long or flat. 21, testing the high of bar 18. So, like I said earlier, 18 being an inside bar, breakouts of inside bars, usually we come back and test the breakout point before long, and here just 2 bars later, we test the high of 18. But because of bar 19, the high of bar 18 becomes support, so expect buyers here. 20 and 21 on a smaller time frame is 2 legs down to support in a tight bull channel, so 21 might be a buy the close bar for a scalp to a new high. But at this point, you're trading leg 1, 2, 3, so you're trading leg 2 for leg 3. This is probably a scalp. And 22 breaks out to a new high, but does not close there. So now we have an argument for the bears. 3 pushes up, might need to correct for a couple of legs sideways down, and this channel may evolve into a trading range. And the risk is that we have to test the start of the channel before we get any sort of measured move up because of the market cycle, spike, pullback, channel evolves into a trading range, and we test the start of the channel which usually becomes the bottom of a trading range, especially in such a strong environment like this. And in environments like this, we don't necessarily have to come back and test the start of the channel. Environments like this being tight bull channels, lots of open gaps, many more bull bars than bear bars. Pause bar 23. It's 3 legs up and not a great sell signal bar. And a 3-bar micro channel. So again, this is a low probability sell. I said the bears have an argument. It's 3 legs up. Maybe they can sell below 23 and justify it because you're getting twice your initial risk. If you get to the bar 16 low, you only need to win that trade half the time for a positive trader's equation. And after 3 pushes up, the expectation is 2 legs sideways to down, at least a minor reversal. 24 was a surprise bar. Surprisingly strong bear bar, 24. The risk is that it's a sell vacuum testing support. We're still not breaking out below the start of the channel. So we're within this trading range. 24, strong enough for a second leg down, but 3-bar micro channel down to 15, deep pullback. This might be the second leg. Every double bottom, every high 2 is a second leg. So 24, even though it looks like 3 legs up and then a reset of the leg count, bar 24 might already be leg 2. And then no follow through. Strong reversal bar 25. Context, good for the bulls. Double bottom, bull flag. We fell below 16 but did not close below, and 25 closing on its high. After 24, probably need at least a small second leg down. So as far as buying above 25, not ideal. Risk is fairly big. You're getting 1R, getting to a new high. Better if you can buy a pullback, maybe in the buy zone of 25. But the market continued straight up on 26. Probably buy the close, 26. It's always in long, and we have 24, a big bear bar that trapped traders. Traders selling 24, trapped on 25, trapped further on 26. And this is still a bull trend, so not ideal for selling and scaling in higher. Bears, if they sold here, they probably need to exit above 25 or above 26. 27 coming back and testing the high of 25, probably buyers here. We think about what I said on 25. Traders would prefer to buy a pullback. The bar is fairly big. 24 probably needs a second leg down, but then we got 26. And because of that, traders who wanted to buy down here, did not get the opportunity because there was no pullback. The bulls got immediate follow through. So because of that, the traders who were looking to buy down here might raise their limit orders to buy at that stop order price, the high of bar 25. So 27 probably support at the high of bar 25. And the bears who sold, let's think about it from the bear perspective. If a bear sells the close 24, and maybe they sell higher at the breakout point, 23 low, their average price, that purple line, the midpoint, is about the high of 25, so same area. So bulls and bears are looking to buy around the close of 27. So 27 might be a buy the close bar. 28 looks like an outside bar, broken above the prior bar and pulled back. Bad for selling. Bears can argue they need a second leg down, but now we have maybe a 4-bar micro channel and a bad sell signal 28, probably buyers below. And this channel might be evolving from a very tight channel into a more broad channel like this. Or maybe something like that. Outside up 29. Nothing to sell, still always in long. We're in the middle of the channel. We just tested the trend line. We may have to test the channel line. 30, an inside bar. Tight trading range, IOI, breakout mode, but middle of a bull channel. Do we have a major trend reversal pattern? I don't think so. We have a trading range, and it's possible we get the bear breakout, but the bears have not even had one close below the moving average today. I think more likely we'll test the highs of the bull trend before there's any reversal attempt. On a higher time frame, this channel up to bar 23 is a breakout. This is simply a minor reversal, a pullback, and we'll probably retest the highs. 31, strong bull bar, but getting close to the channel line. And here's 1, 2, maybe 3 pushes up. So 31, similar to 13 and 19, might be a profit-taking bar. Might be better for selling to take profits than buying to go long. You're buying near resistance. Minor reversal, similar to 14, so probably nothing to panic about if you're a bull, but we may pull back for a couple of legs after 3 pushes up to the channel line. Tight channel up to 32, small reversal bar for the signal. If you're selling here, risk reward profile is good, small risk. You could make 2R, but that means you have low probability. Probably better to look to buy below this bar. Maybe not directly below the bar, but maybe at a breakout point like the bar 29 high. 33, bad entry bar for the bears, but it's a high one at the top of a channel, so probably sellers above 33. Small bull bar, 34. If you sold and you have a stop above 32, you're probably going to get stopped out of the trade, but there's probably sellers up here, bulls taking profits. Nothing major for the bears to sell. The argument the bears have is this might be the top of a bull channel, and the channel may evolve into a trading range, and we have to test all the way back down here. So the bears are looking for late legs to fade for reversals down, but here's an open gap. We have trapped traders from bar 31. So not ideal for selling. Better to look to buy. Micro double top, up, down, 35. The signal bar, small signal bar, and again against fairly strong channel, 25 to 31. Double top, yes, it's a low 2, but low probability, probably buyers below. 36, bear breakout bar, but still part of this tight trading range, still probably buyers not far below. I suspect the downside is limited. This does not look like a major trend reversal setup. And then 37, bull bar, but top of the tight trading range and near the bull channel line. So the upside here might be limited. This is maybe a better place to look to take profits on longs. 38, bear breakout bar, tight trading range continuing, lots of overlap. May have to test a little lower, but open gap, probably support the bar 29 high, the bar 30 high, the moving average. There's layers of support below, so I think the downside might be limited. Breakout follow through, but lots of overlap on the breakout bar and the follow through bar. The follow through bar very small. This is a nested high 2 on 39, one leg down to 33, pull back, second leg down, and here, one leg down, 36, pull back, second leg down, 39. Approaching the breakout point, we're also testing the 24 high. That was also support when we went above 24, sellers above 24, trapped on 31, probably support. 39 might be a buy the close bar. You can see 40 testing the layers of support. So nested high 2, 40, probably okay to buy. 41, bear reversal bar, but now what leg is bar 41? If you're a bear, might be leg 1, 36, leg 2, 39, leg 3, 41. if you're taking a stop order short below 41, you're trading leg 2 for leg 3 against the direction of the trend, just above the moving average. You're taking a low probability trade. As long as you understand that you're taking a low probability trade, that's fine. But the reality is that there's probably more buyers below 41, and the bull breakout 31 still needs a second leg up. The rally from 25 all the way to 31 is a tight channel. This could be a maybe 2 or 3-legged correction of this breakout, testing support. We may get continuation of the rally somewhere near here, again testing layers of support. We've got the moving average right below, we've got the bar 29 high. It's really not ideal for selling. 42, trapping traders selling below 41. 42, bull bar closing on its high. You can call it a wedge, you can call it a high 2, high 1, 40, high 2, 42. Traders short for any reason, probably in their best interest to close positions and buy back shorts above 42. Traders who are flat can buy above 42. Bulls who are long, looking to press their bets, can also buy above 42. This is a reasonable breakout pullback in a bull trend at the moving average. So high 2 in a bull trend at a breakout point after a rally that still needs a second leg. Outside up 43, I should have mentioned about 42 being a small bar. When you have a small signal bar, it's usually not ideal to put your stop directly below the bar, but to have a stop, a measured move down of the bar. So a stop here, you would have been safe from 43. Outside up might be a reset of the leg count and probably buyers in the buy zone of 43. But again, this breakout up to 31 still needs a second leg, minimum target, the high of the day. Doji, the bears see a double top, but the signal bar is small. You're trading against the trend. We're in a bull channel, and it's not really a major trend reversal setup. It's a spike in channel, bull trend, and we may have to correct more. But any sell-off is probably limited and minor. So as far as selling here, probably not ideal. I'm going to speed it up here. So minor reversal, bad sell signal bar, 45. Here's the bull channel line, and we're getting a buy the close rally to the channel line, so probably better to look to take profits here. And then 52, reasonable to exit longs below 52 when you're getting maybe a late leg, 1, 2, 3 near the channel line. We could correct for a couple of legs down. 52 probably needs a second leg down, trapping traders above. Now 54 might be that second leg. 52 breakout, low of 51 becomes resistance. Traders will buy below 51, get trapped on 52, and use that retest to sell out of longs. Bears, 52 needs a second piece. They look to sell the low of 51. They make a scalp. Enter at the 51 low, exit at the close or low of 52. So this might already be 2 legs down for the bears. And this rally is much bigger and stronger than just this one bear bar with a bad follow-through bar. Testing a bit lower, testing support, and then sort of another buy climax to a new high of the day, breaking above the channel line. So another profit-taking bar, not a bar that's great for buying, but if you're long, you probably want to exit when you're testing this channel line. The channel line seems to be behaving, or the market seems to be behaving well around this channel line. Every time we get near the channel line, there seems to be selling. So look to take profits every time we touch this line. So as far as buying here, we're breaking above a channel line. Really not ideal. More likely, the market reverses within 5 bars and tests the trend line. The trend line might be something like that. That seems to me to be the best fit bull trend line. Different computers and different people will draw it different ways. This is just the way I've decided to draw it. But either way, this looks like consecutive buy climaxes late in a bull trend, late in a channel, breaking the channel line, and the expectation is that you're not going to get a strong breakout and even stronger trend above the channel, but this is exhaustion late in the trend. The last of the weak bulls buying, the last of the weak bears buying back shorts. In reality, probably strong traders are selling here. So bulls are selling out of longs and bears are selling to start scaling into shorts. 60 bear bar closing on its low. Always in bulls probably need to exit below 60 late in a bull channel, breaking above a channel line, reversing down. Minimum targets the trend line. So if you think the market will soon be lower, there's no sense in holding on to it long. So if you're buying, better to just exit and look to buy lower. And 60, strong enough bar, similar to 52 for a second leg down, but in this case, even better context. It's an even later leg, it's breaking the channel line, and the bar is even bigger than 52. So okay to sell 60 and sell the lows of 58 and 59, looking for a second piece down. Bad high 1, 61, probably sell the close bar. Getting a second leg down, but we have a sell climax, pause, sell climax, probably will pause. There's probably a sell at the 61 low. Another pause bar may not get to that breakout point, and we didn't quite get to the trend line. Probably go at least a little lower. Is 69 a good buy? It's a high 2, high 1, high 2, but very small bar relative to 68. And this might get one more sell climax down. So sell climax, pause, sell climax, pause. Maybe need one more push down. 62 looks like it's strong enough for the second piece. There's the test of the 61 low, and then a bear breakout of the bull trend line. Now, with more information, maybe we draw the trend line a bit differently. Either way, looks like we broke beyond the trend line, but not in a very significant way, meaning it's only one bar, and it hardly closed below the trend line. So I think more likely this will evolve into a trading range. Even if this is a trend line break, there's a bull trend line here, and this clearly broke that trend line. For a major reversal, the expectation, you need a trend line break, then a retest of the old trend's extreme before there's any major reversal. So the high close of the trend, 59, probably a test magnet. And if we get there, it's probably resistance. 3 consecutive sell climaxes, 3 pushes down, double bottom with 55. 55 was a major higher low, breakout to a new high in the trend. So at this point, the market's either in a trading range or a bear trend. 3 consecutive sell climaxes down to support, probably a buy zone. 64 might be a buy the close bar. It's aggressive, but it's 3 pushes to support. Bears really need at least one more bar to convince traders it's always in short. If they don't get it, instead of buying 64, it's also okay to wait for the disappointment bar, the bar that says, look, the bears did not get their one more bar, so it's not always in short. So 65 might be a buy the close bar. But fairly tight channel down from 58 to 65. This probably needs another leg down. But it is a double bottom and it's 3 pushes down, so it's probably going to be a bounce, maybe a deep pullback, maybe to 50%. So look at the midpoint, it's around the 63 high. So we'll look for that stop order to get tested. Probably resistance there. 3 4-bar micro channel, but testing resistance. It's the 50% pullback of this tight channel. Probably needs a second leg down, but now the bulls have, like I said, 3 pushes down, double bottom, now a 4-bar micro channel. It's probably buyers below 67. So now the midpoint of this micro channel 64 to 67, also probably buyers down here. And the low close, 64, probably support there as well. So the market's in a tight range, resistance at the 63 high, but support at the 64 close. Micro channel continues to 5 bars, but bad high 1 at the midpoint. So we're at resistance. We have a bad stop order signal bar, probably a sell above or a sell to close, but the downside is probably limited to the 64 close. Maybe we get to the low, but for me, the way I see this, the bears have 1, 2, 3 legs down against the major trend direction. So this is counter trend, 3 legs down. And if you're selling here, you're trading leg 3 for leg 4. My premise would be, I suspect leg 4 will not get to the low of bar of leg 3. So the fourth leg down will not, let me back up, 1, 2, 3 legs down. If you're selling, you're trading leg 3 for leg 4, and I suspect leg 4 will fail to get to the low of leg 3, which means I think it's okay to look to buy here after this micro channel, maybe a wedge double bottom in a bull trend. Look to buy maybe the midpoint of the micro channel, the close of 64, stop below 64. I think that's reasonable to do. On a smaller time frame, 68 broke the trend line, tested the highs, and then sold off again. But bigger picture, if we zoom out just a little bit, again, 64 is leg 3, and the close of 64 is probably support. So we can see 70 tested there, reversed up. There still might be resistance here, might be difficult for the market to get far above here. We might be in a trading range. And even if we do break out of this midpoint, I suspect there's resistance at the high close, 59. This is enough that the market's probably in a trading range at this point. Leg 1, pull back. Leg 2, in a trading range, may pull back deeper. For the bears, 4-bar micro channel, might need a second leg down. But the bulls see breakout, leg 1, two-legged pullback, bears getting a second leg down, testing support. Traders trapped on 69 by bar 70, so this is support. Aggressive traders might buy the close, but because of the time of day, realistically, it's a little too late to be trading for me. But from strictly a price action point of view, this is probably better to buy 3 or 4 bar micro channel, but where's the micro gap? And it's still a bull regime. 75 micro channel continuing, testing support, probably buyers around the 64 close still. Outside up 76, strong enough bar for a second leg. The structure is good for the bulls, double bottom, bull flag, but still probably a trading range at this point. Even if we test the highs, the upside might be limited. When we test the high close, we get to a new high of the day, but we don't close up there. There's sellers up here. And then there's the reaction. So test the new high, find sellers, big trading range bar 78, and then lots of selling 79. Right back down to the bottom of the range. Trading range, buy low, sell high. And a couple of small trading range bars within that range at the end of the day. So that's going to do it for today's review. Thanks everybody for watching and listening. And I'll put the marked up chart at the end of this clip. So that's going to do it. Thanks everybody, and I hope everyone has a good night.